Good morning, everyone. Good morning, good afternoon. How's everybody doing? Let's see if you guys can hear me. Good morning. Can you guys hear me? People were complaining about the sound this morning. Good stuff. Hey, Zeth, what's going on? How's everybody doing? Happy Monday. Sorry about earlier this morning. I had to run out to the dentist, so I had to cut the session a little. Well, I went the hour, but I had to like cut and run. Oh boy. Okay. Well, I guess overnight inventory is a little long, huh? Welcome to the new folks who are listening to us on YouTube. I'm JJ. This is the tradingsyndicate.org, and we are here to help you learn this business, make a living, get profitable, stop losing money, all the good stuff. So what we're trying to do here is we simplify the business of trading, okay? Trading is trading inventory. You take cash, you buy inventory, you sell it at a higher price, get more cash back, hopefully, right? If you can't get rid of your inventory, what do? You put it on sale, right? So that's all we're doing, right? We're just selling ES contracts. The chart that you see in front of you is just a chart of ES contracts and how sales are going. This is a daily chart. It's a TPO chart, otherwise known as a market profile chart. And what we're doing is we're taking cheap inventory that we got on sale, like on Friday. Friday was a big sale, right? Friday was a really big sale. Friday was like, how do I say, um, Black Friday, right? It was like a Black Friday sale, right? Deep, deep discount, right? So what happened was the dealers, the large traders, what they did was they took in inventory all the way down from 74, so to 75.40. They took in inventory all the way down. They bought it. Hey, Kevin, what's going on? Did you get in the room? I sent you the link. They took in that cheap inventory and they've been selling it all night and all morning for profit. Okay? The trade that I talked about on Friday was the look below and fail of 73.91. So if you were buying 7,400 with your stop at 91, you should have sold some at 74.20, sold some at 74.40, and then some up 74.54. Right now we just hit 66 and a quarter. So these are the trades that the large traders in our room and the people that I mentor, especially the prop guys and the fund guys, they take these look below and fails, and it rotates all the way up to the top. This is the bottom of the zone. This is the middle. So right now, if we stay going the same way we are, we're going to be looking for 75.11. Now, there is a bunch of inventory trapped long over 75.11. Let's see, was it just a one-day sale? And are we going to go sideways here? Are we going to come back down? Or do we have a really big rip? Well, we don't know, right? And since none of you are on the TV show Bewitched, you have no idea either, so we have to let the chart tell us, okay? Right now, I took the 1 minute chart and I drew out the cost basis, right? I used 7400 to 7411. It's a nice cost basis. It worked nicely. 2 times cost basis is 7431. 4 times cost basis is up here at 7472. So what's our high right now? 7470. We're close. So the levels are working nicely, right? We've been in distribution all night and all morning. This is the perfect catcher's mitt or look below and fail trade. It's worked beautifully for the large traders. Even for us who are trading, scalping, and if you're trading a smaller account, there was some beautiful look below and fails. Another one, a fail to look below, and then nice trend up. It's been choppy, but you could definitely see that the sellers, right, the people who bought all that inventory at 7,400 and underneath at the end of the day on Friday, they're getting to dispose of that product at nice profits, right? That's the name of the game. That's why they call it a market. So we've actually gone through the single prints, where there were big chunks of trapped longs, and overnight we've chewed through them because we needed supply, right? So there you go, right? We needed the supply. The market went up to get it, right? That's how this works. Markets rotate higher to find sellers. Markets rotate lower to find buyers. Very simple. Right, so we're just going to open. We're going to open inside Friday's range and inside Friday's cost basis. Right, it's a big range. So what we want to do is we want to trade our levels. Right, so if you're scalping, you use the one minute chart. Right, if you're trading larger time frames, use the levels on this chart. Okay. If you have any questions, reach out. The room that I represent is called tradingsyndicate.org. And what we do is we teach you how to make a living, how to make money in a common sense and practical way. So, there's this guy who always responds to my posts on Twitter, and it's like he's reading stuff off AI. I don't use a lot of fancy double talk, right? I figure you guys have too much going on in life. I mean, unless you got nothing to do and you're sitting in front of the screen. But most people have jobs, families. They got to take the kids to hockey practice. They got stuff to do. They don't have 10 years to learn all the patterns and all the sayings and all that stuff. All they want to do is get on a journey to start making some income, right? That's all they want to do, right? They don't want to talk about math and game theory and all that stuff. Where do I buy this thing? Where do I put my risk? Why? Why am I buying it here? Right? What business reason do I have for buying this? Okay? Once you got a business reason to buy it, then you got a place to put your stop, because you know once this business reason is no longer valid, right? I got to get out. I got to get out, right? So I buy something at $5 and I try and sell it at 5.50. But what somebody's selling it at 5.40, 5.30, 5.20, what do? Get out. Because if you buy it at 5 and it goes under 5, now you're taking a loss. Right? Now you're taking a loss on your inventory. Sometimes you will take a loss because your inventory is mispriced. Right? If you buy something that's priced too high, right? That's why we use these zones. Cost, double the price, 4 times the price. I'm short 60 and 3/8 right now, just on a couple of contracts. And I'm putting in a 58, 58 and a quarter cover and see if I get it. I might have to buy it back at 59. But I'm looking for 58, 58 and 3/4 maybe. I bought one back. Where did I buy it back at? I think I bought it back at 58 and a half. And then it popped up, right? So what I did was, there's a seller at 74.72, right? Yeah, well, it said 0.38, so we're back to fractions now, LC. We're going back in time, like Back to the Future. No more. I hate decimalization. Right? Give me a kosher eighth any day. Anyhow, so if you were short, say 70, 71, your stop's here at 72, you've identified a seller, right? You can see that there's a seller, and the seller's putting and competing with other sellers, putting it on sale. Right? They're putting it on sale. So I'm flat. Right? I'm flat. Just testing out, testing out stuff. I'm going to trade a little cautious, right? I've been up since like 4 in the morning. A girlfriend went to start a new job, so we had to get her on a plane and everything, so get her down to London, so careful asking for, oh yeah, you're right, Scott. Yeah, they don't know what that means. A kosher eighth means 1 divided by 8. All right, good looking out. Don't want to get arrested. So we're opening, and we found a bid just off the open, under 74.56. Now let's see where the sellers are waiting. Right? They're waiting. They're waiting like they're in the woods waiting for us to come in with our wallets so they can pounce on us and take our money. I think the seller is going to be just under 66 because there's that top of that candle. If that seller sees buyers, they will raise price up to 68. And if those sellers see buyers, they will raise price all the way up to 74.70 and a quarter. Okay? So inventory is long, right? It's what, 98% long? I don't see much of a correction yet. What does that mean? How many people are short on the way up tonight? The more people are short, the harder this thing has. It has much harder, job going down. So we're looking, okay, there's a seller. We went through the sellers here. Right, there's a little selling before 70, right? Point of control's up here. That's the shorts coming in, like they're coming in hot and heavy. Give me those contracts. I just need to cover. Why do they need to cover? Well, we're doing contract rollover, so I'd rather clear my short position on the old contract before they roll into the new one, which happens to be, 60 points higher than where we are now? So, 40 points. Something like that? 30 points. Anyway, the new contracts got 12,800 contracts. We have 466. So there's some volume in the old one. They're trying to buy the old one. The more of them try and buy it, look at this, right? We're holding 74.54 so far. Business is just opened. Let's see who comes into the store, right? Pretend you're a greeter at Walmart. Is the crowd heavy, right? Are they knocking you over, right? We start running out of buyers, we're going to have to discount price. When the market's open, I always think about that opening low. Does it hold, right? We're still in distribution, right? We're still in distribution. Oh boy. You'll have to forgive me if I sound a little tired. It's because I've been up since 4 in the morning. It's 2:30 in the morning now, so I'm getting old. Getting a little long in the tooth. Let's see. Okay, we're going to test that low, right? That's a normal course of business. Let's see if overnight inventory starts to correct now, right? Once we take out these lows at 56, do we find a bid or do we keep selling a little lower, right? Normal markets will sell off a little lower, right? And you'll come down to this 52 area, right? If you want to know where it's going to stop, on light volume, it'll pause in these areas here. Position, right? Time and volume traded, when you come back down, is usually support, okay? Why? Because that's where they moved. They sold position, distribution, back down to here, right? So now we broke that 52, right? If you're short, that's beautiful. If you're short, that's really beautiful. You're looking for 47, 46, and 45 as your lower targets. If we take out these lows here at 44, then all of the candy above it is going to get a little nervous and start puking out. Ultimate destination trade is 74.24, which is VWAP. So let's see if we start selling off a little lower, a little lower, a little lower. Right, short 45, cover 43. See? Right, we're trading with the market. Right? Why are we short? We're short because inventory's correcting. We're going to put it on sale, right? So if you're short 44, 45, go stick some bids in there. Go stick some bids in there so you know, so you can cover, a little bit. Pay yourself. Yeah, exactly, Moran. These are the kind of shorts we want. We want to short 45, 44, buy it back at 42. 2 points here, 3 points there. It's just a beautiful thing, And quick trades too. I love quick trades. Quick trades are the best. Now we looked underneath 41 and came back up, okay? That's no surprise. Now let's see if we can, where they sell into it again. Right? Now, if you're not used to trading a fast market, right? That's okay. Don't worry about it. You're going to learn, right? So if you're short 47, 46, go put some buy orders down in the 44s. If they don't get executed, buy it back, right? Nice and simple, right? You don't have to, you're not looking for a home run on every trade. You get a base hit here or get a base hit here. Next thing you know, you got $1,000 in your account, right? Pick away at it. Wait for the really good trades. Right? Boom. There you go. Nice, beautiful moves, right? Those of you who are short 50 and under, put some bids down there, and boom, you're covering the 44s. 5 points here, 6 points there. It adds up, right? And then once you get good at it, you know what? You put on some size, right? Once you get your execution skills down, you put some size into it. It's really nice, right? You don't have to you don't have to make 30 points on each trade. You can take 2 or 3 5-point trades, and it adds up, and you minimize your risk that way. Okay. So where's our next stop on this freight train? Down here. Be looking if we can get underneath the 40s. We're looking for 31 and a half. Okay. Oh, there were single prints here. I'm sorry. That's what I forgot. Nobody told me. You guys are asleep. Right? I have an excuse. I'm old for me to forget things. Right? There's single prints here. That's a short position. Right? Are you happy, Moran? That's good. We like it when you're happy. Short covering. Size. Right? If I see a look below and fail of a bigger level at my daily levels or like single prints, it gives me a little bit more bias, right? If I know now that we couldn't fill the single prints, right? We caught a bed, you see all that volume there, that's the short covering. Now we're going to go up. Now I like shorting at an edge, but I have been shorting in the middle of the zone because you can read the order flow when you know the sellers are there, right? Now the thing is, your bias is always confirmed by the chart. So Italian trader, the one thing you must do, and the one thing that every human being has difficulty with, is admitting they're wrong quickly, right? For some reason, I don't have a problem with admitting I'm wrong. I think it's because my mom, just always say that, you're not that smart. Okay, 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 right? So, hey, I was married for 17 years, so you know how to admit you're wrong quickly. All right. So anyway, admit you're wrong and get out and take it. Now the thing is, how long can you trust the price action? In a market like this, for 3 or 4 points, I would say trust the price action for maybe a couple of minutes. Okay? I wouldn't give this thing a minute or two because you can see it's jumping around. If you look at the ES order book on the E-mini, you can see that the E-mini order book is thin, right? At every tick, there's 23, 24, 30 ticks. And the price is kind of jumping around a little bit like NQ. Not as crazy as NQ, and it's a much thicker order book. But if somebody comes in to sell a 300 contract order and they fat finger it, it's going to knock price down because there's not enough contracts at each tick to absorb a large seller. So because it's contract rollover, and because we had a massive liquidation, and because the overnight buying was just getting rid of the stale crap from Friday, you got to be, when you're doing the look below and fail, right? Or if you're doing a look below and fail and inventory is long, you got to be really quick. If you're doing a look above and fail and inventory is really short, you got to be quick. So when you're trading the right direction with the inventory correction, you can afford to make a few more mistakes, right? Or you have a bit more leeway. So if inventory is long and you're shorting it, you can see that the sellers are stepping in at lower and lower prices, right? You can see it, boom, 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 boom. So if you screw up, you know that your value at risk is not as bad because you know where your sellers are going to be. So say you shorted here and you screwed up. If there's no seller here, get the hell out of town. Don't let it go here and here before you cover. Admit you're wrong quickly and get out. You can always re-enter the trade when the conditions are better. And as you get used to saying, hey, you know what, I'm wrong, I'm out, as long as you can do that and it's going to be beautiful because you're going to make a lot more money than you lose, right? You're going to make a lot more money than you lose if you can admit you're wrong quick. Because when you're wrong, boom, you're out, right? You're wrong, you're out. See how there's a seller just under 46? See that? So there's a seller there. So until we get back over 46 and hit the 50s, right, you can stay short. Like I'm short 48, 44.88 on a couple. Just covered one at 42 and 3/4 and the other one at 43. See? But you got to be quick. I'm trading in the direction of the inventory correction once I find out that I think inventory is going to correct down. It starts to correct down. I go with. No reason to try and buy the dip now. Right? Where I'm going to look for a long is if we do one of these. Look underneath 31 and come back up. Right? Because then you'll have flushed out all that inventory above. Or enough that you can get in and out, get paid, and move on. Right? So the single prints to the upside are filling. The overnight position was down here, just under 17. We've been selling it all the way up into the 70s. Beautiful, beautiful inventory trading today. Beautiful. I mean, the wholesalers are making money hand over fist. Okay? Okay. Seller at 50. That's cool. Now look at where, as my old physics teacher would say, now look at, okay, 74.42. You guys see all this volume? That's the liquidating volume from this. They're going to take that and try and sell it as high as they can until they start competing and come back down. So it might chop around here for a bit. You guys get what I'm saying? We're taking this and we're flushing it out here. And if these lows hold, we're going to go back up and do this. So beware of that, okay? Oh boy. How's everybody doing? You guys awake? Not getting cut up too bad? If you don't understand what you're doing, or if you don't understand what I'm talking about, don't worry. You will. You will. In time, especially if you come into a room at Trading Syndicate, we will teach you, right? It's not that complicated, right? It's simple commerce. See how I told you the market was going to go back up? Because we bought all this cheap stuff from the liquidating traders. Back up. Yeah, that's a good idea, Zeth. Sometimes on Mondays you're not completely clued in. Now, I've been up since 5 o'clock in the morning. I've been watching the market while we were getting my girlfriend ready to go to the airport. And so I've kind of, I did that in the morning session. But if you're just waking up now and you haven't traded all weekend, right? So you got a bit of weekend brain, right? You're a little tired, right? Ease into it. You don't have to go running in there, just barrel in there, right? Nice and slow. Take some test trades, use the micro, sit and watch, have a coffee. Don't kill yourself, okay? The way to stay in this business and have a long career is to not get too worked up about any one thing, okay? Trust me, I tried it the other way. I had a heart attack at 44. I used to carry 3 cell phones, and my clients would know that I would answer their phone on the first ring. I didn't take a holiday for 25 years, okay? It didn't get me anywhere except a heart attack. Okay? Take the easy way. There's an easy way to make money in this business, and there's a hard way. I strongly recommend the easy way, because the easy way means you trade with the flow of business. So it's not like trying to have a tug of war with an elephant. Feel me? You guys understand what I'm saying? Yo, Mike, what's up? Guys in the room, you with me? Stupid question? There's no such thing as stupid questions, Milo. So, why would they flush it lower? Because of selling competition, Milo. So say, Milo, you're selling something at $5, right? And Bram and Moran and Arkoy and Raj, they all come and start selling at $4.99. Are you just going to sit there like a bump on a log and not sell it? Right? You're trying to sell something at 5. You got to put it on sale, brother, and that's the flush. So then you flush everybody out, and then the smart money buys it all back cheap, rams it back up, sells it again. It's like a used car lot, right? We're taking the same ES contracts and buying and selling them and buying and selling them. Now, the smart people buy them when it's cheap, sell them when it's expensive. Buy them when it's cheap, sell when it's expensive, right? And then the dumb money sells it when it's cheap, buys it when it's expensive, right? Got to make money off somebody, right? There you go. It's just simple commerce. Once you reprogram your brain and go, oh, this is a business, right? This could be a chart of the sale of baked potatoes. It could be a chart of the sale of hamburgers. And all it's doing is it's telling us minute by minute how the sales of these products are going. That's all it is. It's nothing more than a sales chart. Right? We keep life simple. We make a little money. We relax. Right? So we seem to be finding bids around 44, 45. And now what? It's getting. See how the candles are getting a little smaller? So you notice on the 1 minute chart, the 1 minute chart tells us a lot of information. Tells us how business is. Is it going quick? Is it coming? Are they coming in lots of buyers, lots of sellers? And when the candles get smaller, right? When the candles are small like this, it means business is slow. These are bigger orders. And then business will get slow again, and let's see who comes in next, right? So it's all, geez, Elsie, we've only been open for 20 minutes? Wow. Yeah, as long as the offer keeps moving lower, you can stay short. How do you know when to see bids? I've got a great tool for that. You let the sellers tell you when they see buyers. So, you know the first part of your sentence, you can stay short as long as that offer keeps moving lower. Once that offer starts moving back up, then you know the sellers have seen buyers and they're raising price. So that's when you cut the trade. You answered your own question. Right? Now you're getting it, right? As we say in Canada, Milo, now you're cooking with gas. Beautiful. Yeah, the sellers see, they do the work. You don't even have to do the work. The sellers will say, oh, geez, hey, you know, I'm selling sunglasses at the beach and 3 bus loads of tourists just came out. Whoop, I'm going to raise price. Right? Don't worry. Just be easy on yourself. Even though these concepts are simple enough that a golden retriever can understand it, they are not taught every day in trading. So a lot of learning how to trade and make money is kind of uncluttering your mind, because these other trading coaches and people, they fill you with this and that and delta schmelta, gefelta, you know, head and shoulders, I'm a little teacup pattern, all this stuff. You're trying to memorize all this stuff. You're trying to execute and you're getting punched in the face and nothing's working. Let's just take all of that and pretend that we're selling loaves of bread, right? And this is a chart that's telling us how the sales are going minute by minute. So simple. Right? See how they're lifting the offer over 54? Now, if they see a lot of buyers, they'll start lifting to 56, 57, 58. If they see the buyers are walking their way, they're going to follow them down, right? If you look at my Twitter profile in the old days, I used to have a saying from my boss. And he would say, JJ, I never saw a bid I didn't like. Show me a bid, I'll fill it. Why? Because we always have the cheapest cost basis, right? So tomorrow, I'm not sure what time, I think it'll be tomorrow, we're recording our very first podcast of our new podcast called Proper Villains. Okay? And this first inaugural episode will be about my client, the Penguin, one of the largest gold finds ever, and the geologist who couldn't fly. Okay? And the lesson of that podcast is going to be cost basis. Right? So there's a lot of videos in the room, Milo. If you just go into the where is it? Hang on. It's in the JJ training videos. I gotta get AI to like catalog all my videos and make it easier to find them. I'll work on that. So we're just chopping around here. It's a good Monday morning. Wholesale is getting rid of inventory above VWAP, right? It's a beautiful thing. The execution labs are a little bit more detailed, but the execution labs also have some 101 videos in there as well. Scroll through there when you have time. There's the one on inventory and cost basis. Right. So we got a bit of a back and forth going here between 42 and 55. Right. Let's take a look at the larger chart. Look at this, right? This is what I'm talking about. See, this is all the volume from Friday and earlier this evening. Look, we're getting rid of it here. So anything that people bought under 74.30, 2010, 73.91, they're selling up here at 74.50. It's a beautiful distribution. And here's the thing. See, a lot of people were looking at continuation on the sell side. We did a look below and fail of the Friday low. There's a poor low down here, and a poor low just means there's no size down there. There's just sell, so the market rips back up. There's buyers competing, and then they don't have to sell it down there. It's very simple. So they raise price. They raise price all the way from 73.60 up to 74.70. 100-point range in Globex. Beautiful. Beautiful. And the thing is, when you have a range that big, you don't have to trade the whole range, right? Trading the whole range is trying to ride a dinosaur, right? Start with a horse. Start with a Shetland pony. You know, it's like trying to eat a double extra large pizza all in one mouthful. Cut it up into pieces. As you get skill, you'll be able to hold trades longer, right? I'm not saying don't hold trade longer, but if you're not consistent, if you're not making money, if you have no skill, and don't worry if you don't have any skill because nobody just turns up and, ooh, I'm a super trader out of the box. I've never seen anybody do that. Hey, we filled the singles, right? I have never seen anybody, right? I've never seen a virtuoso trader. Like you see those kids, they can, 5 years old, they can sit down and they can play Chopin on the piano, right? I've never seen anybody just sit down at a trading terminal and start making money. First of all, they wouldn't even know the software. It takes a little bit of time. Okay, we are looking for 74.31 on this liquidation. Single prints can be targets for price. Here we're just using this green area here. Actually, these I should have gotten rid of because they were single prints to the downside. They were supply. But we can. It's a little bit more of a finicky trade, Milo, so that's why I just use these levels here, right? So a little look below and fail of 31. So you buy a few at 31, 32. You sell them at 34, 35. Life is good. Life is simple. You're selling, and I got one left. Thank you very much. So I bought the 32s. I sold the 35s. Simple, easy trade, right? Execution, it's going to take some time to learn how to do it. And you're going to screw it up, right? So that's the trade I was waiting for, right? I took it on 3 E-minis or 4, right? Just 3 points, right? Bought 32, sold 35. I'm done. I'm relaxing, right? I'm happy. But that's a nice, simple trade. These are the kind of trades that I want to teach you guys. Right? You know, you'll go onto these educators and they're trying to hold trades for 30, 50, 100 points. But you guys aren't learning anything from that. Here you can learn how to hunt. Right? Market looks under 31.5, comes back up, or you buy 32, you put your stop at 31, sell it at 35. Right? It's beautiful. Right? On 4 contracts. You know, so 3 points on 4 contracts. That's not bad. You know, $50 a point, 3 points. You know, $600 in your jeans before commission. You do that trade once a day, that's it. I don't think we're going to do it live, Foy Stars. We're going to tape it and then put it out. We might end up doing it live one of these days. And I'm going to be doing some Twitter spaces too. I got a lot of time now. My girlfriend's gone. I'm not going to be with her for a couple of months at least. So I got a ton of time. I'll be driving you guys crazy with content. My to-do list has shrunk considerably. Right? So LC, we finally have B period. Right? We hit VWAP. Boom, look below and fail again of 31, right back up. Now, where are they going to sell into it? When the market corrects, right? When the market goes like this, and my first thought is, where are they going to sell into it? I know it's going up, but I know they're going to sell into it somewhere, right? Honestly, that was a long first period, eh? I wonder if we're in for the summer like, you know, I was kind of hoping for Seinfeld, the summer of George, but it looks like it's going to be busy. I don't trust anything right now, Zeth, in this market. I honestly don't. I think it's fishy as hell that we sold off 200 points on Friday and we reclaimed 100 of it Sunday night. But I'm going to keep my tinfoil hat off, right? I'm not going to go full tinfoil hat, right? We got enough of those out there. That's a beautiful look below and fill on the second one too. I mean, I made 3 points, but if you had bought 33, 34, selling them at 41, 6 points, right? We are Kramer stealing the lobsters out of the fisherman's traps. That's exactly who we are. And that's the best way to be. Right? We get in, we get out, we get paid. Have a coffee. Right? Relax. Right? Just nice boring money. Right? Make a little here, make a little there. It's okay, Jimmy. Don't worry about it. Rewind this later. That's your homework. Right? If you're at work, for the love of God, concentrate on work. Especially if you're like driving a forklift or something like that. If you're listening to me and you're driving a forklift, turn me off, drive the forklift, try not to run over anybody. Or if you're driving a big dump truck or something, right? Be careful. These things are recorded, right? It's not like 1972 and you had to press play. It's automatically recorded, right? Telling people to restart their computers. I used to love tech support, especially in the early 90s, because that was really all you could do was just reboot the damn thing. The levels work well because of business. The algos execute the business. Think of the algos like these tiny little robots, right? So you know how Amazon has robots who take shit off the shelf and everything, and you have robots that paint cars and robots that do welding. We have robots that deliver product to you, and that's exactly what algos are. They're beautiful mathematical robots that have been designed by the zero and one mafia, the people who write code, and they're beautiful because they allow the market to trade at very specific levels, which keeps our business expenses down. You drive an 18-wheeler? Yeah. Yeah, don't get distracted, okay? Right? Don't get distracted. We don't want you to jackknife and cause an accident. Then we'll have to hire that guy from Highway Through Hell to come drag you out. Algos execute the business plan that they've been trained to do. They feel like it's magic, but it is magic of the math guys, right? And girls, sorry. Right? It's the message, it's the magic of math and all these people who program stuff that I have no idea how they do it, right? Or how it's done. I have no clue. Right? It's like, alchemy in a computer chip. It's magic, right? But it's precise magic. And for traders who are trading retail now, electronic execution and the algos are the most beautiful thing. Like Da Vinci would blush. This stuff is so beautiful. You can buy a level, put your stop 6 ticks underneath. They don't overshoot the level if the order flow is nice and slow. Unless size comes in, right? Size is going to break any level. But like, look at that touch of VWAP at 74.29.97, 74.30 to the penny. You buy VWAP or you even buy a point above VWAP, put your stop there, sell it at 40. The precision of this market and the execution costs are almost nothing. When I was on the trade desk, my trade ticket charge was $25, right? So I would charge you 5% commission on the dollar value of the trade. And just the ticket charge for me to pull a piece of paper out and write on it was $25, right? So on a $100,000 trade, the commission's $5,000. You guys are trading for 78 cents a contract back and forth on the micro. That's practically free, right? It's the golden age of retail trading. Now all you got to do is keep your head straight, learn a little about the business, and learn how to execute. Beautiful. We got sellers just under 48. Where's that? 47, right? We got sellers at 47. We'll have some more up here in the 50s. Doing a little back and forth here, right? It's a little bit of a two-step, right? Nice work, Lear. Hey, Lear, how you been, man? Long time. What crazy contraption are you building in the garage this summer? He's always got something in his garage. Pool heater, cold fusion. He's always building something. Would you take a trade over 41 or 47? Well, that's a good question. Right now, I wouldn't take a trade right now, right? Now, you're thinking if it breaks 47, buy the breakout, right? I'm thinking if I was long 36.40 and it broke over 47, I would sell every frickin' contract that I own plus a few more. So I'm trained to sell into breakouts. Right? I'm trained to buy into liquidation. In the middle, I got no business. I got nothing to do. Right? So for me right now, I don't see any direction. I'd love another look below and fail of 31. But right here, right, I've been trading now for a couple hours. I made a little bit of dough. Nothing crazy. Now I'm going to relax. I'm going to relax. Because I'm really literally on 4 hours of sleep. The other thing is, Milo, even if you're young, after you've made a little bit of money trading, it's always good to chill out a little bit, right? Say you make $1,000, right? And there's nothing really clear, right? Then just stop. Get a coffee, get something to eat, relax for a little bit, right? Come back later when the opportunity is more clear, right? Because what happens is a lot of times you make money and you keep going and you keep going and then all the money's gone. Because you start pushing it, you start taking things for granted, you start thinking it's house money, right? And these distributions are tricky after a big low. When it's kind of slow like this, just kind of ease back on the throttle, right? Let the market build out some time. Take the money you made, put it away that you can't get at it. Right? The biggest thing in trading is as soon as when you're first starting, right? Professional traders, I always get in trouble. JJ, we want to push it. Yeah, you got an edge, you can push it. Just make sure you're not too tired so you don't make stupid decisions. Because I do when I'm tired. I get sloppy, right? I miss things. Right? I've been up since 4:30 in the morning. It's 3 in the afternoon now. Right? And I'm an old man now, right? So my reflexes are kind of slowing. The market's getting choppier. It would be very, very easy for me to give up the money that I made this morning. Right? Very easy for me to do so. Right? So I'm just going to chill. Right? If it's early in the morning for you, sit and watch and make notes. Only take trades when they trade at the edge. Right? The edge is your friend. Direction and the edge. This is not what we call a meaningful correction to overnight inventory. For overnight inventory to correct meaningfully, we'd have to come down and print 73.68. We're far from that right now, right? You want to see something neat? I'll show you, okay? You see this blue crap right here? You see all that blue stuff? That's the position. That's the position. Okay, that is where the inventory is priced, right? This is where the overnight inventory is priced here. You see the blue crap here? That's where the inventory is priced on the open, right? So we're taking this blue crap and we're selling it here. And look, when we came down and put it on sale, we came right to the top of where the blue crap is. This is called the value area, or they call this value area high. But when you say value area, people look at you with this completely stunned look in their eyes because they have no idea what the hell you're talking about. So if I say I paid between 73.60, right, and 74.30, if I bought all this stuff here, I'm going to go sell it up higher, and when I have to put it on sale, I can put it on sale all the way back down and still make money because most of it's priced here. So I can sell it at 41, at 30, at 20. I can sell it all the way down to where the majority of it is priced. Yeah, it was kind of a B profile, right? Raj, you always say catcher's mitt. This was a number one A plus setup, look below and fail / catcher's mitt trade. Poor low, look below and fail of the previous day low. It's like every single star aligned. Right? That's why I said look below and fail of 73.91, we're rotating higher. And now we're going to take that cheap crap from 74.30 down and sell it up here in the 40s for as long as we can. So I wouldn't be going long here. What I'm doing is I'm waiting for the next trade setup, right? But this was the perfect textbook catcher's mitt, right? And for those of you who are not baseball fans, it's when you throw up a pop fly and the catcher just sits there and just waits and boom, catches it, right? You grab all the liquidating inventory into wholesale hands and redistribute it into the retail flow for profit. It is used car lot 101. Friday, nobody could afford their car payment. And they all came in because they needed money for Budweiser for the weekend. So we took their cars and we gave them a really cheap price, right? We just gouged them. But they needed the money for whatever they wanted to do on the weekend. So we flushed them all out nice and cheap. We took it and we sold it Sunday night higher. What a beautiful thing, right? And as my friends in Salt Lake City say, JJ, it's just commerce. That's all it is. These are the charts of commerce. That's all we're doing. Beautiful. You keep going, Lear. Beautiful. Now let's see if we get underneath 31, if we get underneath 36, if we get under these levels, I'll be looking for the market to come into the 74.11s. But just use the levels, right? Use the levels, they work. Now there's nothing special about the way I draw my levels. It's this, I'm used to finding a cost basis, and then I'm used to doing one or two trades and stopping. Now, it looks easy. It's not easy, right? It's not easy. It's incredibly difficult. But the thing is, right, you just practice. Everything is just practice, okay? It's all practice. It's like learning how to play. It's like learning how to play an instrument. NQs follow QQQ? I have no clue. I never look. When people say, you look at one market to see if it follows another one, now you're looking at two markets and you're not focused. I'm a big believer, my goal, into keeping an eye on the traffic of the street that you're trying to cross. Because all I care about is I know that there's a seller at 40. I know they stop selling at 31. What are they doing in the QQ? I could care less if they're dancing the chicken dance in the NQ futures. Right? They could be dancing the chicken dance or the Macarena. I could care less because I'm looking to buy 32, stop 31, sell 36, 37, 38. Nice and simple. Right? They want us to complicate their lives, your life. Right? All these other trading educators want to complicate your life so you never make any money, so you're on the tit forever and you have to pay them a monthly fee forever. Right? We charge you like $15 a month. We're not making any money off you. When I do private one-on-one coaching, it's lifetime coaching. One-time fee, you work with me and I will haunt you into becoming profitable. So if you're like looking for mentorship where it's not just a week or an hour here, I will work you until you make money. Like I'll work you like a rented mule until you start puking dollar bills, right? Yeah, I don't even care about NQ, NQ, QQQ. You know, I'm a pepper, you're a pepper, he's a pepper too. Who cares, right? Now I know you guys don't have to educate me what the ES is, okay? Guys have been trading for 34 years, right? But I'm saying I don't care, right? We don't care who's doing what in the Nasdaq, in the SPY. All we care about is in the market that you're trading. Where are the sellers? Where do they stop selling? Where's the inventory? Where is it priced? How am I going to make a buck? Is it a good time to do business or should I wait until my business setup shows itself? That's all we care about. And trust me, your life is going to be so much less complicated. Okay? If I said to you, listen, if you could make $500 to $1,000 a day, right? And you are done. You're not holding positions, you're not stressing, right? And when you lose money, you lose a couple of bucks here, a couple $100 there, but you make more than you lose. Is that something that you would be interested in? So I charge a fair amount for the mentorship. I charge 3 Gs, but it's for life, right? So the mentorship, Pollux, is like you sitting next to me on a trade desk. And I basically beat you into profitability. I have an over 98% success rate because I work with people for life. I work with them every day, every other day, right? Right? Yeah, no problem, William. I'm not beating up on you. I'm talking to Pollux in the room. Sorry. Yeah, so I work with people one-on-one for as long as it takes them to get profitable, which means you get my phone number. We talk every day, every other day. Sometimes people have to work. They have family stuff. But I'm there all the time. And we keep working and working and working. Right? And we work you through your issues and your problems. We teach you the business and we teach you how to make money. Right? And I don't throw wrenches at people. It's the lifetime one-on-one mentoring is 3 Gs. Yeah. It's a one-time fee and that's it. I take money from you. I haunt you until you're profitable. You have to be in front of the monitor. If you want to make 500 a day and not have to be in front of the monitor, there's other ways to make money. You can set up a drop shipping business, sell supplements, right? All that kind of thing, right? The mentorship is 3,000, right? And it's for life. Pollux, you're transitioning. You're transitioning from institutional to retail. If you want to talk about some one-on-ones, give me a message. I'll get on the phone with you. I know exactly what you're going through. Being a market maker and then becoming a retail trader, dear God, it's like you're flying a jet one day and then you're given a hang glider to fly. It's it's really tough, right? You can't cheat, you can't hide trades and inventories, you can't trade size to get out of a situation. It's very disciplined and very hard to switch from institutional to retail, right? I would definitely think you say prop firms are better for newbies because first you use the simulator to learn the software. Then you go and use a prop firm. So if you blow yourself up or something happens, you can reset the thing, right? Using a cash account means you are going to burn through your cash because you're going to make mistakes. Every trader makes mistakes. You can't get beyond that. Every trader makes mistakes. You got to be able to learn in an environment that's not going to cost you your house, right? Work within their rules, and when you work within the rules of a of a firm, you have to learn discipline. Very important. To make $500 a day without being at the monitor every day, just make 2,500 dollars one day. Well, I don't think you're really thinking about trading, William. That's not really realistic, right? Especially if you're not making any money a day. What you need to do is learn a little bit about the business, right? And you're going to have to put in the screen time. I don't have any magic algo, magic computer. I'm not one of those guys that don't give out signals and all that stuff. I teach you how to make a living. I teach you the business, right? You also have to have realistic goals. So if you just want to make 2,500 in one day and then not do anything for the rest of the week, not watch the market, day trading is not for you. I would suggest maybe think about being an investor, right? If you don't have time, not everybody can sit in front of a screen, right? Think about investing. Think about swing trading. See you, Mike. You have a good one. Enjoy that work. Trading is like a job, William. It's a job. You got to be there every day. You got to learn how the markets change, right? A lot of people like my girlfriend, right? She's like, JJ, just give me one trade. I want to take one trade and all my troubles will be over. I want to take one trade and retire, right? Now we're going to take this inventory and go sell it higher, okay? So if your position long 31 to 48, 46, we're going to take this cheap crap here and we're going to sell it up here. Yeah, I wish I could find you a way just to make $2,500 whenever you want. Hey, I'm lazy. I would go for it. Unfortunately, it's not. It was a nice long from VWAP, definitely. Ooh, another catcher's mitt, right? That's really nice. So far, if you take out this and look at that chart, we have been distributing over VWAP since 7 o'clock my time this morning. The look belows of VWAP have been quickly bought up. So we're still in distribution. We're back into 4 times cost basis, right? For the rest of the day, look for back and forth. People will buy inventory in the 42s, sell it in the 60s. Drop down, buy it back, drop down, buy it back, sell it. It's just, this is the world's largest used car lot, right? You take the cheap stuff, mark it up, put it on sale, mark it up, put it on sale again. When you put it on sale, the buyers come in, right? Beautiful distribution, beautiful, right? So tomorrow I'll also tell you guys when we do the new podcast. The new podcast, look out for it. It's called Proper Villains. And it's where I show you how real money is made. Not this Wolf of Wall Street stuff. That guy was a fool and a joker who didn't keep anything. Right? So we're going to teach you and show you what's really how markets work. How billionaires make money. Billionaires that you've never heard about. People that you'll walk by the street and they got a billion two in the bank offshore sitting in Switzerland and nobody even knows about it. They've been there forever. Nobody knows they even exist. How do I? I was their trader. So we're going to go through that and we're going to use their example to teach you people, everybody, retail, teach people, we're going to teach people how to use smart money when you're trading. All right? The 10-year-old Toyota. We have a friend of ours who is like, he's like a 9-figure trader. And he drives a 10-year-old Toyota pickup truck. Really nice guy. Like, you think that he works at the post office when you meet him. He's such a nice guy. No ego. Alrighty, my friends. You have a great afternoon, great morning. Stay out of trouble. Come learn how to trade at tradingsyndicate.org. Okay? Good to see you again, Kevin. Right? Wolves of Wall Street are about structured products? This is no structured products. It's about selling penny stocks to suckers. We'll teach you how to keep the money. Don't worry. We'll teach you. Stay with us. Have a wonderful day. We'll see you tomorrow morning. My first session is at 7:30 in the morning UK time, 2:30 in the morning New York time for those insomniacs. Stay out of trouble. We will see you tomorrow morning. Don't take candy from strange market makers. Thank you, everyone. I appreciate you for showing up. Great questions. Bye for now.